Hey guys, Raf here from the Endgame Investor, and rumors of gold revaluation are swirling. The chatter is getting pretty heavy on X. I personally, I'm not sure if this is just the Twitter X conscious mind getting out of control or if there is an actual basis to these speculations. I heard that Scott Bessent said something about monetizing the US balance sheet. What exactly that means? Does that mean monetizing the gold? Does that mean selling off national forests or something or parks to developers? It could mean a lot of things. And I think there's a lot of I wouldn't say baseless, but a little bit wild speculation as to what is going on here and whether this actually means gold revaluation, which is really just debt revaluation, because as I said in the last video, the gold cannot be revalued. Gold is money. The dollar and everything else is measured against gold. It always has been, because there is no escaping the gold standard entirely, because the gold itself is money. As I've explained on this channel many, many times, and I'm really, I think, the only one who does it, that because of the Misesian regression principle or the regression theorem, whatever you want to call it, all dollars go back to gold. You can't have a price structure without going back to gold. And so you have to go back in time all the way to the monetary nexus point that originates in gold. So all dollars are measured in gold. All goods and services are measured in gold. They're measured through a dollar intermediary. But if you're going to revalue that dollar intermediary as a different definition of how much gold it is worth, you're going to alter the entire price structure. It's like putting a giant speed bump in the middle of the regression theorem or regression principle road, and it alters the entire price schema, the entire price continuum. It's like putting a black hole in space-time.
Cosmic apotheosis wears off faster than salvia.
I'm starting to believe you, because I just finished merging with your essence for an endless epoch, and I'm already back to thinking you're an asshole.
Fine with me. Let's just go our separate ways.
But the purpose of this video is to go into some possibilities as to what happens if the Trump administration actually does revalue the dollar or revalue the debt relative to gold. What that really is an admission of reality that the dollar is worth a lot less than people thought that it was. And before we get into any of the charts, we can just take, for example, a country, let's say a Latin American country or a poor Arab country or any of these other countries that revalue their currency relative to the dollar, then start a new peg. What happens is they devalue their currency, and then everyone's currency ends up a lot more worthless, or you can't be more worthless, or a lot less value than it was the night before. Everyone's savings are robbed, and then the poverty that had already existed on day X minus 1 is finally revealed on day X or an X plus 1. People wake up with a lot less purchasing power than they thought they did. Now, with other countries that are on a dollar standard, they give up the lie that their currency is worth XYZ dollars and they revalue it lower so that their currency is worth a lot less and the dollar is worth a lot more, and everybody loses their savings. So, because the dollar is the reserve currency, it's the reserve currency against what? It's the reserve currency against gold, against money itself. And so if the dollar is revalued against gold, then a lot of purchasing power that people thought they had on day X minus 1 evaporates on day X and X plus 1 on the day after the revaluation. And where does that purchasing power go? It goes into the gold itself. But let's get a little bit more specific by going back in time and looking at these charts, and I'll show you some historical precedent as to what happened with various prices and assets the last time the dollar was revalued against gold, which was in 1933 and 1934.
The United States must take firmly in its own hands the control of the gold value of our dollar. And as a further effective means to that end, I am going to establish a government market for gold in the United States. Therefore, under the clearly defined authority of existing law, I am authorizing the Reconstruction Finance Corporation to buy or sell gold at prices to be determined from time to time after consultation with the Secretary of the Treasury and the President.
And the last thing we'll go into is where gold would go now, minimally on a revaluation overnight to $2,800, which is around the market price, and why it will go there. dollar revaluation. I'll call it gold revaluation because that's how people refer to it. Gold revaluation is not a new thing. It's been happening throughout history. It happens again and again. It's a way to erase the inflation. And by erasing the inflation, you erase the purchasing power of dollars that go with it. This is what happened to consumer prices the last time gold was revalued from 21 to $35 from 1933 to 1934. So this is the Great Depression. Consumer prices were falling month after month after month. They were going down 9% year over year, around even as high as 10 or 11, 12% year over year. And here is the gold revaluation in April 1933. Prices were still going down around 9, 10% a year. And from there, consumer prices started to rise, and they rose and rose and rose until we get to 1934. This was the final revaluation in somewhere in early 1934. I forgot the month exactly, but we hit, it looks to be around a 5, 6% a year in the CPI. So we had massive consumer price inflation as gold was revalued. So we can expect consumer prices in dollar terms to go much, much, much higher. Obviously, in gold terms, they will go down because gold was revalued 66% higher, excuse me, from 21 to 35. And this revaluation will be much more extreme. If we're talking anywhere near 2,800, it's several orders of magnitude more extreme than that. So 42 to 2,800, I don't know. It's a big number. So what happens to gold equities, miners, streamers, all those stocks that have been dead for so long? Well, here we have a chart from Gold Charts R Us, and we can see here relative to the Dow, gold is this line over here, and it goes up in the revaluation in April 1933, and finally up to $35 in the middle of 1934. I think it was June 1934. What was happening here? Well, the Dow, we saw that we hit bottom in 1932. We hit another close to a bottom here in 1933. And the gold revaluation, rumors of gold revaluation started over here. The Dow started higher. And on the gold revaluation, we were already, it was like a sell the news, buy the rumor, sell the fact kind of thing. And then stocks, at least the Dow Jones, meandered around this level until 1935. And it didn't start climbing until the revaluation was complete. But relative to that, we have Homestake Mining here in the blue, which is the main gold miner back then. And this stock really went insane once the gold revaluation started in 1933, and that's when it really took off. So as stocks meandered back and forth, and remember, another thing to consider here is that the Dow was falling and falling and falling because this was a deflationary depression and prices were falling, consumer prices were falling as well. But now we can print as much money, the Fed can print as much money as it wants. So what we're talking about here is even if the stock indices like the Dow and the S&P 500 are much higher now than they are relative to the top here, it means that consumer prices are going to go a lot higher, a lot faster because we're in an inflationary system, whereas this was still a deflationary system because it was still some vestige of a gold standard. So the point I'm making here is that stocks are not going to benefit much relatively. It's the gold stocks that are going to go crazy. You can see here, this is exactly what happened in the 1930s. Let's go to the next chart. Now we're talking about gold being revalued, or really the dollar being revalued to $2,800 an ounce. That is nowhere near enough to clear the market. If everyone wants gold at 2,800, there will not be enough gold relative to the amount of dollars that exist. The price that would be needed to be able to convert just the monetary base. The monetary base are the dollars that are directly in control of the Fed. M2 are the dollars that are based on the monetary base that banks can lend on top of. So deposits in your checking account are mostly M2, and the monetary base is what the M2, your bank deposits, are based on. A gold price to cover the entire monetary base would have to be $21,340. That's the amount of gold in Fort Knox, supposedly. That's the monetary base divided by the amount of gold supposedly in Fort Knox. You get a price of $21,340. If you want to cover the entire M2, that means if there is a situation where on a revaluation, everyone with every dollar in their account in every bank in the United States decides they want to convert all their dollars into gold, gold would need to be $82,706 an ounce in order to cover all of those M2 deposits. And we're just talking about $2,800. So $2,800 would not be a market price. It is not clearable. But what would happen? This, my friends, is what would happen minimally. On a revaluation, $2,800, the minimum market price for gold would very quickly, probably maybe not overnight, it would take a few weeks, maybe a month or two, would minimally go to 17,000. Why is that? Well, if we're to take the bear market bottom price of gold from February 2001, which is a low of $256, and that was as gold was still statutorily $42.22. The ratio of 256 to 42, you'd have to multiply 2,800, and you'd get by that ratio about $17,300. Let's just say 17,000 even. And why is that? Because $2,800, if we'll just statutorily $2,800, nobody knows. The market does not know who owns exactly how many times over, how many times it's hypothecated and rehypothecated, what is the encumbrance on the gold in Fort Knox, who exactly owns it with how many claims. The market does not know. The market doesn't even know how much gold is there, which is why a gold audit is being discussed, because the market really does not know. So if the Fed or the Treasury or whoever it is saying that gold that you cannot get, that we do not know how much it is encumbered and how many times or how many owners that gold represents, that gold is worth $2,800 an ounce. How much is gold in your hand going to be worth? It's going to be worth much, much more. If we take the bear market bottom price for gold in 2001, February 2001, at $256, or I think it was 252, whatever it was, then you multiply by that factor, 42 to 252, and you get 17,000. And that's assuming maximum faith possible in the current monetary system at a $2,800 statutory gold price. I believe it will go much higher than that. But the most important thing to understand is that the dollar number for the gold price doesn't really matter. Once there is a revaluation, all of the purchasing power that exists in the entire dollar market cap that exists in the world gets transferred into gold at that rate. So whatever the dollar amount will be, it will be a massive shift in purchasing power from dollar holders to gold holders. We'll see the prices of everything fall precipitously in gold terms overnight as the revaluation happens, and they will continue to plummet in the weeks ahead. And we'll see that in a rising gold price in dollar terms, but we'll see that mostly in a plummeting price for everything in gold terms. Whether it happens by statute or it happens by the market, hyperinflation is just a market-based revaluation of the dollar versus gold, or any currency versus gold. That's what hyperinflation is. These are all different words to describe the same thing. The end game is one thing, is the destruction of the dollar derivative system. Call it deflation, call it inflation, call it revaluation. All roads lead to the same end game. Some of them will have different nominal dollar values at the end, but after all is said and done, what happens in every single case is that purchasing power gets sucked out of the fiat monetary system and the holders of those claims, and it gets shoved back into money for the stackers to reorganize the division of labor and be at the top. If you want gold before this revaluation takes place, if it ever does, either by statute or by market, then go to Miles Franklin, link in the description below, and mention the endgame investor. And if you want to take your gold and silver and bury it in a dirty man's safe, click the link in the description below and use the code endgame10 at checkout for 10% off. And if you want my latest religious lessons in monetary policy, government, and economics, check out the Patreon at patreon.com/endgameinvestor. And I'll see you guys soon.